want an exposure to a market or an
Everything they need in one place.
The world's foremost authority on individuals, advisors and institutions.
Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall, and here with me today is Charlie Audrey, manager of the Henderson China Opportunities Fund. Hi Charlie.
Hi Emma.
So usually you have between 50 and 60 stocks in the fund, but at the moment you're slightly below that. Why is that?
Yeah, we've been running around 45. At the moment we're 47, and it's really a reflection of the more difficult economic circumstances in China. Really fewer companies are excelling in this environment, and so we're really focusing on the very best. So in some industries where we would have owned 2 operators, we now just own the best.
And this might change though this month because there's some regulation coming which should open up the sort of sphere of investable options.
Yep, so we have a connect, the mutual market access between Hong Kong and Shanghai, and what this means is that foreign investors will have easier access to Shanghai. So we're all accelerating our research into mainland companies, and yeah, I think over the next few months you'll see some more stocks in the fund because there's some actually quite interesting, unique investment opportunities there.
One of the questions perhaps investors might have is about corporate governance. So the Hong Kong market is obviously used to be sort of UK owned, and with that comes a sort of more Western stringent governance. Investing in Shanghai, are there more sort of opportunities to be caught up?
It's certainly different. I would say one of the things that investors like about Hong Kong, as you said, is the old British rule, which actually gives, I would say, fairer law courts. In China, of course, the Communist Party is above everything, so they could control the law courts. So I think investors will feel more comfortable about being able to have redress in corporate governance issues in Hong Kong. In Shanghai, that's something that we will have to get more comfortable with. But from our point of view, what it means is that we really elevate the assessment of quality and shareholder friendliness in our picks in that market. And having travelled a lot in China and met a lot of these Shanghai companies, I would say the range of corporate governance is significantly broader than in Hong Kong. There are the very best and there are a lot of poor ones. So again, you have to be very selective.
And looking at the companies that are going to be coming to the fore for you guys, what kind of sectors is it? I mean, what's the market made up of?
Well, in Shanghai, it's slightly different in that they have a lot more industrial side. But they also have a very long history of healthcare companies, and healthcare is something that we've been investing in a lot in Hong Kong, and we expect to do it in Shanghai as well. The healthcare sector for us is really attractive in China, really because of demographics. You have a lot of aging people, they're also richer, and the government is putting more plans through for insurance and healthcare insurance. So expenditure and budgets on healthcare are growing, and so the long-term outlook for that sector is pretty good. So that's certainly one area where we're invested in Hong Kong, and we'll be looking in Shanghai as well.
Oh, you mentioned at the beginning one of the reasons why you're low on stocks at the moment is that the macro outlook is not so great. Over the summer we had some disappointing figures for GDP. How is that affecting your choices?
Well, I'd say generally speaking, there's sort of 2 elements to the portfolio. There's an element that is the best companies that can deliver almost whatever the economy, so slightly less cyclical. And that's either because they have a non-cyclical business in China, or they have a secular driver, or they're international businesses. So examples would be Tencent, which is an internet business, AIA, which is life insurance, or even Lenovo, which has a strong domestic PC position in China, but is taking market share internationally. And then the other part of the portfolio is more economically sensitive areas like financials, areas like industrials, which tend to trade more with macro data. So I think what you're referring to maybe is the August PMI number was a little bit weaker. And yes, we had that rally through the middle of the year, and that tends to be when those financials and more sensitive stocks have gone up. So I'd say that sort of seems to have a different part of the portfolio than the more structural drivers, which make up the vast majority of the fund.
And so perhaps it's about tweaking it as you get more information.
Yeah. I mean, the pickup in the economy that we had this year started in about May time. What we had in 2012 and 2013 is it started in September. So really, we've actually had an acceleration earlier in the year. And so we're watching for what happens from here. And I think a lot of it depends on the property sector.
Charlie, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.